We are 11 days away from defaulting on our nation's debt. The Republicans and Democrats are still fighting amongst themselves, but there may be signs for optimism. And on Monday, tomorrow, Ford's Jim Farley, it's do or die for them. They either put up or shut up, and we might see huge effects on the Ford stock. Welcome back, everybody. My name's Nicholas, and this is Investing Against the Grain. Do me a favor, hit the like button, hit the subscribe button, or ring that bell. All right, let's kick things off first with the debt ceiling before we get into the Ford crazy news. I'm going to go ahead and share my screen here. Hopefully you guys can all see this good. All right, so let's go ahead and kick this off. So headline here from CNBC, Biden and McCarthy to meet at White House on Monday to try and avoid looming debt default. Okay, we might be actually seeing some progress here. So let's scroll down here. I highlighted a few things. I'm going to try to zoom in a little bit here for you guys. All right, so let's see. As a possible debt default looms just 11 days away, President Joe Biden and House Speaker Kevin McCarthy will meet in person at the White House on Monday to resume negotiations around the debt ceiling, NBC News reports. McCarthy told reporters that he had a productive call with Biden on Sunday. All right, so this just came out, so this was hours ago. And that the staff members for both parties will resume talks later that same day. So again, that's today. A White House spokesperson confirmed that the staff would restart negotiations at 6 p.m. Sunday and that Biden and McCarthy will meet on Monday. It is not yet known what time the meeting will begin, according to NBC News. All right, so here's where I think you might start seeing things get a little more positive. All right, lifting the debt ceiling is necessary for the government to cover spending commitments already approved by Congress and the president in order to prevent a default. Raising the debt ceiling does not authorize new spending, but House Republicans have said they will not lift the limit if Biden and lawmakers do not agree to future spending cuts. Now, this is kind of a semantic thing. I can understand both sides' perspective. On the Democrat side, this time, right, it seems to switch every time depending on who the president is. But on the Democrat side, they're saying, listen, we have already committed to spending this money. It's our responsibility to pay our bills, right? We're not asking for new things or more money or anything like that. We're just saying we gotta stand by our commitments. We've spent this money, now we gotta pay it. Meanwhile, on the Republican side, they're saying, well, this is kind of ass backwards. We're spending money before we approve its ability to be spent, which I kind of agree with that sentiment. And it's only this time that the Republicans are coming from this angle, really, right? It tends to flip flop again, depending on who's in power. But you would think that you should have to pass a debt ceiling first, and then whatever you agree to, then that's the money you have allocated to go spend. But that's going to have to that's restructuring the entire way we do everything in this country. So that's not going to happen. But the point here is that in this case, the Democrats are saying, hey, we've spent this, we got to pay our bills. This is what the Republicans were saying last time. This time, the Republicans are saying, well, we got to cut spending because of yada, yada, yada. And normally, this is what the Democrats would have said before whenever Trump was in power. So it's this whole thing. It flip-flops every single time, depending on who's in power. So both sides are honestly saying or speaking at both sides of their mouth. Anyways, let's continue here. So Biden said earlier on Sunday that Republicans need to move from their extreme position. During a press conference ahead of his departure from the Group of Seven summit in Japan, after negotiations stalled late Saturday, Biden said he planned to call McCarthy on his way back to Washington. Quote, it's time for Republicans to accept that there is no bipartisan deal to be made solely on their partisan terms, Biden said. McCarthy told reporters on Sunday after arriving to the Capitol that he is glad the president is returning to the U.S. Quote, I think he's got to get away from the socialist wing of the Democratic Party and represent America. And that means both sides have to compromise, end quote. So here's where you see they're still kind of giving jabs to each other, which I expect, right? The way we know that things are getting closer and closer to actually getting to an agreement is when all of the name calling, the insults, go from just insults to insults plus some kind of compromise, insults plus some kind of like nice thing that you say, right? So here they're both kind of saying something nice to each other, but at the same time, they're really not. So Janet Yellen reaffirmed her warning that the United States could default on its debt as early as June 1st, which she says could cause widespread economic chaos. There will be no good outcomes if Congress fails to take action, she said. Now, I agree with her 100%, but I will also point out that she is part of, Joe Biden's crew, and Joe Biden's crew is trying to paint a doomsday scenario, right? Which is what they should do, right? It's politics 101. So Janet Yellen's out saying this, and the reason that she's more so on their side is because this is coming from NBC. So Janet Yellen says, "Quote: We're focused on raising the debt ceiling, and there will be hard choices if that doesn't occur," she told NBC. Meet the Press. There can be no acceptable outcomes if the debt ceiling isn't raised, regardless of what decisions we make. End quote. All right. So this is kind of still the tug of war that's going on. This is the jawboning before we actually, put egos to the side and the centrists really come to the table to make an actual agreement. Anyways, let's continue here. So, default could lead to an economic downturn as bad as the Great Recession, with 8 million Americans losing their job and the stock market's value falling by about 45%. Okay, now this is where I think there's a little bit of hyperbole. Do I know what's going to happen? No, not at all. Do they? No, not at all. They have no idea what would happen. Okay. So this is where this to me is just fear mongering. Would bad things potentially happen? Yes. Do we know what those would be? No. And to really quantify, to say the stock market would drop by 45%, like, I don't know how you really value that, right? Like that, this is a gut feel. If anyone knew how to predict these things that well, our government wouldn't have these debt issues, right? They would be making lots of money in the stock market. She also noted a Moody's analytics report, which found similar numbers with more than 7 million Americans out of work and 10 trillion in household wealth evaporated. Yellen also warned that a debt ceiling breach could affect essential government service. This is true. Biden said Sunday he thinks an agreement can be reached with Republicans, but that it is not certain. I can't guarantee I can't guarantee that they wouldn't force a default by doing something outrageous, he said. Okay, so here we have Biden saying that he thinks we can get to a deal, right? He's gonna call on his flight back from Washington to speak with McCarthy after negotiations kind of fell apart on Saturday. Yeah, McCarthy happy that he's coming. McCarthy is essentially saying, "Hey, we just need a compromise," right? So I think besides the jawboning and some of the rhetoric and then somewhat name calling and mudslinging, whatever, you're starting to see this the rhetoric change to them kind of coming to the table. So I think this is a positive sign. This is just a story we've seen play out over and over again. I do think that we'll be fine. Knock on wood. I don't want to jinx anything, but I think we'll be fine. I think it's just a matter of these two political divisive parties coming together. I mean, I will give them some leeway, which maybe I shouldn't, but McCarthy and Biden have huge obstacles, maybe less so Biden, but McCarthy, in that even if McCarthy tries to say, "Hey, I'm going to be as moderate as I can," right? I'm not going to come from a red lens. I'm not going to come from a blue lens. I'm coming from a purple lens, right? Moderate, coming to the table. I'll propose this agreement. Well, McCarthy still has to whip up all of his people, right? Get enough votes to have this done. And so he get big pushback from the rest of the Republican Party, right? They could choose to vote against any kind of bill that would, or any kind of agreement to raise the debt ceiling. So there's a lot more going on here. You're essentially trying to appease all these personalities, all these different interests, right? And all these different, people have their own reason, their own biases, their own districts, their own lobbyists that are pushing their own buttons. So it's a very, very complicated position to be in if you're McCarthy. And on Biden's side, I think Biden has a good handle on his party. I think whichever way he goes, they will go. Aside from certain people like an AOC, if you will. All right, so that's my thoughts on that. So we'll see what happens. It's gonna be a big week. Hopefully, we can get this decided before this coming up weekend. Because if we go into this coming up weekend, it's Memorial Day. I mean, I do think you'll start to see the stock market have an effect one way or another. But I think they can do it. I think they'll avoid this. If for nothing else, the Democrats kind of have a slightly weaker hand than the Republicans in the fact that they are the party in charge and they are trying to, get reelected. They want to maintain. And so they don't need any more bad news from an economic perspective to go against them, right? There's already the war, there's inflation, we have high interest rates. I mean, the stock market's down. I mean, you can go on and on. So the Democrats really need to win here. They don't need any more chaos in the Biden administration. All right, let's move on to more drama with Jim Farley. So, headline reads, Monday is Ford's chance to convince Wall Street skeptics of its EV plans. Interesting. So this is really a do or die for Jim Farley. On Monday, Ford will attempt to turn skeptics of its electric vehicle growth plans, which some Wall Street analysts have called ambitious and crazy high, into believers. The Detroit automaker will host its Capital Markets Day, during which it has promised to provide details of how Ford expects to achieve previously stated targets of 8% EBIT margin and on its electric vehicle unit, which, by the way, was a negative 100%, or I think 100%, 90%, something like that in the past Q1 earnings, and a 2 million EV production run rate by 2026, up from an expected 600,000 by year end. Now, 600,000 by year end, I don't think that's going to happen either. We'll see. We still have another 7 months to go. Give it 7 months. I think it's gonna be a tight one. It's gonna be really tough for Ford, and that keep in mind that's production run rate, like the theoretical possibility, right? It doesn't even mean that they will be producing that. It's just the theoretical possibility where there could be. Quote, we will take you through why we believe that 8% margins is totally realistic despite all the pricing pressures that we will absolutely get because everyone wants to grow, CEO Jim Farley said during the company's first quarter. Okay, now what he's really saying here is the pricing pressure from essentially all the other auto manufacturers who are trying to jump into the EV market are going to have essentially the same price as them, but the pricing pressure comes from who? The pricing pressure really comes from Tesla because Tesla is dropping their prices, right? Tesla has dropped them significantly. And when you really do the math and you really start to figure things out, whether it's including the EV credit, whether it's including the supercharge station, the OS, the easeability, the just the performance all around, and just Tesla, the brand itself, it's going to be really hard to compete on price and value compared to Tesla. Meanwhile, and not only is Ford facing that pressure, which really they all are, all the OEMs, everybody's facing that pressure from Tesla, right? Tesla has their foot on their neck. But if that wasn't bad enough, Ford has to compete against everyone else as well, right? They're all competing against each other. They're all kind of in the same boat. So we'll see what happens here. But Jim Farley really has a tough road ahead of him. And this 8% margin, again, this is going to have to recover from, I forget what it was. I wish I could pull it up, but it was either like negative 90% or negative 100% for the Model E division within their earnings. Ford also is expected to preview its second generation battery products and technology, which the company has said will be crucial to achieving the 8% EBIT margin. The EV business is expected to lose about $3 billion this year. $3 billion. That's a lot of money. I think they will probably lose more than $3 billion, to be honest. But let's unpack this real quick. So it's second generation battery products. So on the earnings call, they essentially said that their first generation of vehicles are crap, that they're really not going to be what allows them to get to profitability. They essentially completely excommunicated the first gen and they hyped up the second gen. I don't know if this was intentional or not, but if to me it was the thing you don't do if you want to avoid the Osborne effect. And again, the Osborne effect is essentially me as a consumer saying, hey, I'm going to wait for the second gen instead of buying the first gen because of everything he just said. Now, it's a quarterly earnings call, so who knows how many people actually listen to it and how much impact that could have. But I would say it was kind of a slip up, just my opinion. Anyways, they have so this second generation battery products, what they're really saying is the vehicles, right? Is their second generation vehicles. Now, Ford's not making their own batteries or anything right now. I mean, really kudos to GM for at least, trying with the Ultium platform, although with Sandy Monroe, he just did a teardown of the Hummer's battery pack, and not good, really bad, very wasteful. And I imagine that's going to be the same thing with their truck, and that's why they have this amazing range supposedly. But we'll see what comes up with that. Now, let's take a look at this breakdown here. So I'm sitting here telling you negative 90, negative 100%, right? But keep in mind, this is margin for 2022. What I'm referring to is Q1 2023 margins. And yes, that was over double what you see right here of negative 40. But let's be gracious, okay? Let's say that we're going off of negative 40%. Well, they're saying that they can improve 20% of that purely on scale. So I guess we supposedly that's going to be this year. They'll get the 600,000 in production, not deliveries, but they have the ability to do that production. Doesn't even mean they're actually going to do that, right? And even that 600,000 really is probably like, take 10% off, so take 60,000 off of that. So it's more like 540,000. You take 10% off because of downtime, holidays, etc. All right. So then another 15% from design and engineering. Okay, so this I think is believable, and a scale I think is believable as well. Battery 10%. So this gets a little complicated. The battery part. What exactly do you think is going to happen here? Do you think it's just from the general cost of batteries coming down? That's a big number here if that's what you think. And then this is interesting. Other 3% is just other. So year end 2026, 8%. So in 2026, right, year end, so essentially 2.5 years from now, they will be at 8%. Today, Tesla is at 19.5%. All right, that's essentially almost, well, yeah, it's just under triple what this is. It's over double what they plan to do in 2.5 years. This just shows you how far ahead Tesla is, and this is before they introduced the lower cost vehicle with the new way of building it. This is before we've actually seen all the factories ramp up. This is before we've seen all of the new lower prices for materials and commodities and chips, etc., flow through this balance sheet. This is before all of that, and on top of that, this is before we even think about FSD or anything like that. Which, by the way, this 8% includes their Blue Cruise, which they have as a service, and all this other stuff that they're throwing in there. There's a lot of upset customers out there because they essentially tripled the price on this. So there's a hot mess here for Ford, but they have this opportunity to convince investors, which I'm not really sure they will. So Ford previously said it expects to hit that profit margin largely through scale. Again, we can see it here, right? 20% they're saying through scale. So largely through scale, EV battery improvements, and efficiencies in design and engineering. Quote, there's definitely some analysts that are skeptical, end quote. Morningstar analyst David Winston told CNBC, I think Monday is an opportunity to try and convince some of those skeptics that it can happen. I am personally willing to give them the benefit of the doubt on that. You've got to win people over. Okay, so this is interesting because you don't ever see that with Tesla, right? When Tesla says that they're going to go for 20 million, people laugh at them, right? Just like they laughed at Tesla whenever they said they're going to hit 500,000 by 2020, right? People are like, no, that's impossible. That's never going to happen. No product has ever had a CAGR of 50% year over year for that amount of time. It was like 8-9 years in order to hit 500,000. It's never been done. Not in cell phones, not in anything. No physical product has ever had that happen, right? And what's CAGR? Compound annual growth rate. So it's a 50% year over year over year over year is what they would have to grow in order to hit 500,000. Guess what? They did it. There was none of this. There's none of this. Where was it? Let me just go up here. I'm personally willing to give them the benefit of the doubt on that. You've got to win people over. There's none of that for Tesla. That didn't exist. And now when they're saying 20 million, guess what? Same thing. People are laughing at them. There's still no benefit of the doubt for Tesla. But hey, that's okay. we'll stick with Ford, who keeps and GM, right? This goes for all of them, who keep delaying and delaying everything they say they're going to do. They keep coming up short, and they have negative gross margins, not a little bit, 100% negative gross margins. I mean, it's just insane. Anyways, let's continue. This is about Ford, not Tesla. Whiston described the timeline for the targets as tight. Others have been more critical. Morgan Stanley, Jonas, during Ford's first quarter earnings call, described the EV production increase as crazy high. Barclays analyst Dan Levy, in a note to investors this week, called it ambitious, right? I think that's a little bit of euphemism, maybe even a little sarcasm in there. All right, quote. Currently, we are skeptical as to Ford's ability to meet both targets as we expect it to opt for a balance of volumes with profit opportunities. This is a brilliant point brought up. Why is this brilliant? Because Ford has three real parts of their business now, right? They've broken up into three parts. They've got the fleet, which I guess you call it the Pro. You got Ford Blue, which is their ICE division. You got you got Model E, which is the electric side. And what Levy's saying here is that he thinks that they will opt for a profitability, a balance to get good margins that keep shareholders happy amongst all three of those. So in other words, they're not going to invest more into the electric vehicle part of it, the Model E division, if it's going to if it's going to lose them more money, and they can't maintain that with the Ford Blue side, right? It's kind of this like catch-22 that Ford finds themselves in. And I think that we saw that in these last earnings, in Q1's earnings. Now, this doesn't mean that Ford won't get pushed back against a wall and it's going to be like, okay, keep making your trucks. Everything else has to go. We have to go all in on the electric vehicle side because Tesla's eating our lunch. It's game, set, match. We better do that now. Take it on the chin. So what? We'll be happy about this in 3 or 4 years. That may happen. And I think that is what will happen over the long term, is that Ford will become a niche player. They'll have a couple EV models, and they'll have the F-150, maybe not even the F-150, but F-250, F-350, right? Those more niche product when it comes to trucks, right? For construction workers and things that just need more towing power. But even then, I can see electric vehicles eventually overtaking that. Currently, we are skeptical okay, we already read that. Okay, analysts, don't expect much movement in the stock from the event unless Ford surprises with new product or change in previously announced plans. I don't understand what's with this always like, we can't have any excitement unless there's a new product announced, right? You saw that with the Tesla Investor Day. Yeah, they didn't announce a new product per se, right? But they gave us the landscape on how they were going to make the next generation vehicle at, twice the speed, half the cost, double, triple the volume. But no, we didn't see a vehicle or a name, right? We saw all of it, but we didn't see the actual what it looks like. And so, well, then Tesla just disappointed all of us, right? So I imagine you'll see a lot of that here as well, unless Ford gets, the buy as most OEMs do compared to Tesla. But still, this is such a shallow way of thinking, is that the stock can only move if there's a new product announced here, especially if they tell you they're working on something, especially if they tell you what that should look like the way Tesla does, then I would say kudos to Ford if they do that, right? If they lay it out from a technology perspective, from a manufacturing perspective, a raw materials perspective, they can lay that out the way Tesla did, then I think they should be rewarded, maybe not on the stock price, but given a kudos, and it should be a respectable, a happy exchange there, right? It's okay. Well, Ford's telling us, they're educating us, they're giving us a timeline, so we should be happy with that. All right. Overall, we think Ford's key targets are unlikely to be different from its recent teach-in session, but management will attempt to give investors more comfort around them. Monday is really going to be a big day for Ford. They have a chance to really change the narrative, especially after Q1 earnings and what we saw for the Model E division. They get to essentially pave a road with more details, more facts, and they have the attention of everyone on Wall Street, all the analysts. So for Jim Farley, this will be a big day, right? So we'll see what happens tomorrow. And we'll also see for the rest of the week what happens with this debt ceiling negotiation. Hopefully we get some resolution, because if we can get the debt ceiling resolution completed, and if we see the CPI comes out lower than we expected, or continues to trend downward, and then the Fed potentially pauses on during the next meeting, I think it's the 14th, man, we might be in a very good place for the back half of the year. Because again, the back half of the year is normally where all the gains are made in the stock market. So we could see some very promising upside if we're able to thread all these needles. But again, things change day by day. That's why we make these episodes, these videos, so that we can all kind of stay informed and exchange ideas. All right, we're gonna leave it there. Do me a favor, hit the like button, hit the subscribe button, ring that bell. I love you all. Peace.